Hello and welcome to the show. Today we have with us Mr. Rohit Sipahi Malani of Temasek, and he's right here with us. Rohit, good to have you on the show. Now, first of all, you are the key decision maker when it comes to all the investments at Temasek. I wanted to understand your mindset about India. You've said in the past that you are very pro structural reform countries like India. India tops that list for you. But from where we started with Modi giving a large vision for India and the reforms to now where we are, a lot of people have shown their anxiety and irritation on how their expectations haven't been met. Are you still very hopeful and positive?
So, if you just step back, when I look at the world and I look at India, I mean, I think India amongst emerging markets has probably the best macro story right now, and probably better than it's ever been in the last decade, right? Current account deficit is less than 1%. Inflation's down to 5% from double digits 18 months ago. The fiscal seems to be on a steady decline. So all that, is quite good. Secondly, there are not many countries in the world, emerging markets, where you have a majority government that's committed to structural reform. And if you look even in the last year, we have seen progress in areas like financial inclusion, direct disbursements of cash subsidies to prevent leakage, transparency in resource allocation. Hopefully, we'll see if the GST bill goes through. These are all, I guess, things moving in the right direction. And from our perspective, when we look at investing, we're looking at a 3 to 5 year perspective. So as long as we see that progressing, I think that's what we're looking for. And like I said, compared to other emerging markets, things do seem to be a lot better here than in other places.
All right. So in comparison with other emerging markets, India is looking way more attractive. You invested $1 billion last financial year, $1 billion in the last 3 months of this financial year. Is this momentum going to continue? By the end of this financial year, how much are you going to end up investing?
So look, we're very bottom-up investors, right? So you said we invested over $1 billion across over 10 transactions in the last fiscal year. And the last 3 months, again, we sort of committed over $1 billion. But a lot of these transactions were sort of in the making even during the course of the last financial year. It just so happened that a lot of them got announced or closed this quarter. So clearly, I wouldn't take the current run rate over the last 3 to be multiplied by 4. But I think the bottom line is that we're very bottom-up investors. If we find the right opportunities, we will invest. And we are positive about the outlook, so we want to invest. I mean, that's, I would say, the key message.
So which are these destinations which is going to find Temasek money in the coming times? You have been quite varied in your portfolio. Real estate is one of those sectors that you have just started investing in with Oberoi Realty, which is considered to be one of the more transparent and growth-oriented companies in India. Property area, real estate, how focused are you? Because it is going through a downturn. You see definitely an uptick in that coming in.
So again, the reason obviously we invested in it because we are positive about the medium-term outlook. Again, it's very difficult for us to say whether you're going to see an uptick in 6 months, 12 months, or longer. I think we invest looking at valuations. We're looking at the prospects for the company from a 3 to 5 year perspective, if not longer. And obviously, on that basis, we do find some attractive opportunities in the real estate sector. And I think this was the first of our investments out there.
All right. So pretty much it completed your portfolio when it comes to the infrastructure space?
Broadly, if I look back, what are the key themes that we look at in India, right? I mean, in line, our global themes are transforming economies, growing middle-income populations, emerging champions. Now, India resonates well with all these themes.
Right.
And real estate clearly is a beneficiary of the growing middle-income populations out here. So it resonates with one of the themes. And so therefore, it was a natural area to look at. And so when there was an opportunity and we thought it was a good company and it was attractive to us, we did it. But if you see, across the board, we are investing in a number of sectors that are in line with this transforming economies, which is financial services, or the growing middle-income population, which reflects consumption, and whether it's consumer goods, healthcare services, agribusinesses, etc. And then we're also looking at strong companies from India which have global potential in areas like pharma or technology. So we're fairly broad-based, And frankly, given the amount of capital we are looking at and we have been putting into India, you need to be broad-based so that you have the flexibility to put in money where you find the right opportunities.
Of course, you have a divergent, and not just divergent, you have a differentiated investment philosophy as well. And not many of your peers in the private equity space really have public market transactions being done. You've done a lot of that, and that will continue. Is the philosophy going to be more combination of public and private, or is it going to be more public focused at this point?
So as you said, we have the flexibility and it'll depend on opportunities bottom up. So if you look 2 years back in 2013 during the taper tantrum, you had a lot of blue chip companies in the public markets that were trading at very attractive valuations. So that year, almost all our investments were in the public markets because that provided us the best risk reward opportunity. Now, last year, when you had a run up in the markets, we had a mix where over half our investments were private or negotiated transactions, but we still did some public transactions where we felt there was value. So in that sense, it will be a combination, and it'll really be a function of bottom-up opportunities that we sort of see.
You have quite a mixed portfolio. So you have investments in something like a GMR Energy and Adani Ports. So some of these heavy infrastructure-based companies. Are you happy with all of them?
So look, broadly speaking, our portfolio in India has done very well in the last few years. So we're quite happy with the performance of our portfolio. I won't comment on individual companies, but I would say if you just look at some of these companies that you mentioned that are listed, some of them are listed, and if you look at their stock market performance over the last couple of years, I think you'll get the answer. They've actually done quite well. Having said that, I keep saying that, look, you can't comment on whether you're happy with an investment or not till you actually exit, because mark to market is more your ego. It's a question of you've got to actually go through the full cycle. But let me suffice to say that actually we're quite happy with the performance of, I think substantially all our investments in our portfolio.
Sure. So you did have a return of a little over 19% in the last financial year. Is India outperforming or underperforming that run rate?
So we don't disclose returns for individual investments, but
you can tell me at least underperforming or outperforming.
You can, if you look at least the public market investments that you have, that are disclosed out there, I think just doing a quick Bloomberg scan would tell you that pretty much all of them have outperformed that number. But I can't give you an overall number for our India portfolio.
Right. I also wanted to bring about Crompton investments. It has been one of the latest investments that you made. Is the buyout focus going to be strong for Temasek going forward, or do you think that partnering with a strategic is still the way private equities need to go at this point?
So look, again, from our perspective, we look at a broad spectrum of opportunities. I wouldn't say that buyouts are a particular focus for us, but if we see an attractive opportunity in the buyout space, we will look at it seriously. But we look at early stage companies, growth companies, mature companies, minority stakes, majority stakes. We're quite flexible. So I wouldn't say buyouts are a particular focus, but it's clearly something that we would look at when there are opportunities.
At this point, if you have to make an investment, is it more driven towards private or the public markets? Because a lot of people have said that the valuations have gone overboard. What is your thinking? Is it overheated right now, or is there a lot of headroom if you have a 3 to 5 years horizon for investments?
Very company specific and very bottom up, right? So if you just look at the last quarter, some of the investments we disclosed, for example, the pipe transaction we did with Glenmark, right? Now that's a public listed company and we did it alongside whatever the market price was at the time of investment. We put that money into the company. So it's not that we're not doing public investments. At the same time, we're also looking at private opportunities. Valuations you've got to look at in the context of the the prospects for the company. On an overall macro level, if you look at where India is trading right now, close to 16 times earnings, that's slightly higher than long-term averages. but not crazily so. Um, Globally, this is an issue we face in all markets because with liquidity that is abundant, I mean, if you take the US market, it's trading at about 2 standard deviations over its 10-year averages. If you take it Europe, it's also substantially higher than its long-term averages. You know, you take that almost any market, you will see valuations are higher than long-term averages being driven by liquidity and government policies. So, you know, so in that sense, I wouldn't look at just India in isolation. When I look at it, yes, valuations are higher than long-term averages, but not crazily so. And then I think on a bottom-up basis, you've got to look at, you know, what does it mean? You know, where are we in the investment cycle? Where are we in the corporate earnings cycle? And if you believe that basically we are on the path of recovery, you know, corporate margins are probably the lowest they've been in several years. So if you see a recovery in that, then it's very easy to justify the valuations in some sense. But again, I don't think you can take it across on a blanket basis. There are companies selectively that we think are attractive at current valuations, and there are others that are not. So I wouldn't make a blanket statement that it's overvalued or that it's undervalued, basically.
But it's not as cheap as you can make all public investments. You are going for a combination.
We
of
will look at a
both public-
combination. Basically, we'll look at a combination of public and private. You know, I mean, if we find a lot of attractive public ones, we'll do more of that. A lot of attractive private ones, we'll do more of that.
What can really disrupt the optimism?
So look, I mean, for us, as I said, the two things. One is we're looking for a continued pace of structural reforms. We've seen some of that in the last year, and we will look to see that continuing. Right?
Have they been enough so far?
So things that have actually been positive, as I said, you know, some of the policies on subsidy leakages being curbed through direct benefit transfers, through the Jan Dhan Yojana account and financial inclusion and so on and so forth. That's obviously a step in the right direction, which I think in the long term could be very positive. There's been steps towards transparency in resource allocations, as we've seen in coal and we've seen in the spectrum. That's, you know, clearly a positive. GST is an important milestone. I think things that we are waiting to see is a recovery in the investment cycle.
Right.
The government has recognized that probably they need to initiate that before expecting the private sector to come in. So we are sort of seeing the beginnings of that. And if you look at the indicators, it shows the early signs of a revival in the investment cycle.
Which are these indicators?
If you just look at basically new project implementations, if you look at capital good imports, you know, some of these indicators, if you look, they're beginning to trend up. Still very early days. But that's something I think which we got to watch out for. And my own sense is the government's clearly taking the lead, and you would need to expect to see the private sector follow, whether it's in 12 or 18 months. I think that's what one needs to see. And I think that's what we look at when we look at the growth of the economy.
What about the tax issues then? How concerned are you about that MAT issue which is going on about the foreign portfolio investors?
So look, I would just say for all investors, including us, what is important is transparency and consistency of policy. From our perspective, we haven't been impacted by any of the tax issues, so not peculiar to us. But I think for the market as a whole, they are looking at transparency and consistency of policies. Clearly, the government seems to recognize the need for that and have clearly said that's something they're focused on. And we'll just have to see that, how that's implemented over the next.
You have a fair bit of mix when it comes to the small and the large companies. You're one of those only private equity investors in India who has a huge amount of share in big business houses across the board. So you have investments in Mahindra, in even Bharti, in Godrej, in Tata. All of them. What has been your philosophy, and is this large business house outlook really going to continue?
So as you said, we actually have investments across the spectrum. We've got the large business house investments, but we've also got relatively early stage investment.
But fair bit of deployment there.
By definition, just your ability to deploy capital in a larger company is more than in a smaller company. So that I would, I'd put it in that context.
Online space, you have a fair bit of investments made there as well. Snapdeal is one of them. A lot of people do talk about the bubble being created in terms of the valuations. How do you see it?
So it's a question that comes up not just in India, but in the private tech space globally. People raise this question all the time, right? But the fact is that a lot of these are disruptive businesses which will have huge growth opportunities. So again, it's on a blanket basis, it's tough to sort of say. Clearly, the winners in some of these disruptive spaces, we look at it case by case, and we will invest. We invest even today across the globe. We're selectively investing in some of these who we believe have the potential to be truly disruptive businesses and grow to be regional or global champions. But at the same time, not all of them are going to be winners, and some of them clearly the valuations are excessive, and we would not invest in them, and we pass on those opportunities. So again, it's very difficult to just put a blanket number and say, is it high or sort of it's low. I mean, but clearly we have to be selective, and it's only the winners who are going to justify their valuation.
So more investments in that one, and you see a lot of scope in that?
We see scope in disruptive technologies that will disrupt and transform traditional industries, right? So that is a focus for us, not just in India, but globally, and we've been quite active out there. Now, clearly, by definition, because these are relatively earlier stage and because they should be disruptive, the risks are higher, and there will be things that don't work out. But overall, we think that investing in the space and being selective and our focus on that should provide us very good returns.
Okay, and exit opportunities as well. Do you foresee that also coming very easily and at higher returns?
We've never really had an issue around exits, and
especially with private companies.
It's a question. It becomes an issue, obviously, if you have a time-bound period of exit, right? Because these companies may go through ups and downs. There's never a linear progression. And so if I have a fund which is maturing and I have to sort of sell in the next 1 year, yes, I could get stuck. But for us, that's not an issue. We can always choose the right time to invest because we don't have money that we have to return to our LPs. We're investing out of our balance sheet, which is why historically exits has never really been an issue for us in India.
Going with your theme of technology and innovation, telecom is another space that you have a little bit of investments. You are in Tata Tele, which is not considered to be doing right now that well, and also is debt laden. How do you see some of your investments in these kind of pockets?
So, it's not fair to me to comment on individual investments. As I said, when I look at our portfolio as a whole, I think we're quite comfortable with all the investments where they are. And as a portfolio, we have been doing quite well.
So as telecom per se in India, you see
even
a lot
telecom,
of activity.
we've had an investment in Bharti Infratel. We've have an investment in Bharti Airtel, Bharti Telecom actually. So we have investments in the telecom space and in the technology space and in the media space. And generally, we're quite comfortable. TMT as a whole is the second largest component of our global portfolio, and also is a fairly large portion of our India portfolio. And it's something which resonates a lot with our theme of growing middle income populations.
You have said that your focus is clear on the consumer centric, a large part of that consumer centric technology innovation. One focus area or one sector of choice which you think is looking quite bullish for Temasek? Or most bullish?
I can't give you that answer because generally
speaking, financial services, something like an ICICI's home loan business which is up for sale, will that interest somebody like you?
So again, I won't comment on individual investments, but I would say financial services, largest part of our portfolio globally. It's a large part of our portfolio in India. It's an important portfolio for us. Telecom, media, technology, particularly the technology side where there's disruptive innovation, important area of focus for us also in India. If I look at consumer, healthcare services, pharma, IT services, broadly technology, all areas of interest for us.
Right. So any particular sector which you find very risky and would stay away from definitely?
So purely from as a philosophy, we don't do gambling, and we don't invest in that sector. We don't invest in cigarettes. So a couple of no-nos as such. But otherwise, we're generally quite open. What
about steel and such, capital intensive sectors and high debt sectors?
So it's a question of the individual opportunities, right? You've got to look at the industry outlook and the company and the valuations, right? And the competitive position of the company. So again, it's not a no, but you've got to look at it, where does it fit in with our themes? right? And if I look at that, it's probably less aligned with our themes than some of the others.
And what about some of these over-leveraged companies? They are on the block, and there could be many such investment destinations that could be available. Some of the other private equity firms are clearly looking at taking advantage of that. Is Temasek also going to be in that queue?
It comes back to the specific opportunity. If the company is good, if we like the sector, it fits in with our themes, and it's highly leveraged, then it's an opportunity for us to invest out there. Right, so I think that's where it just comes down to that. But it's not that we are looking at leveraged companies per se just because today those companies may be available.
To understand, is cement one area that you don't mind investing in?
We have invested in cement. We have invested in
more
cement.
investments expected, because there is one large transaction that is going on you're part of.
So it's an area which we find interesting as a sector. Like I said, the individual opportunities, we will look at them, and then it's a function of really what the valuation is and what the terms of the investment are, whether they make sense or not. So, but we have invested in cement in India, so it's a sector clearly we look at.
Okay, you don't mind more if there is good destination. But finally, I wanted to understand one bit. We are already 3 months down in this particular financial year. You already have a fair bit of outlook for the rest of the year. 1 billion investments already done. By this financial year, what is the kind of quantum that we could be expecting, at least as per the internal target, so that at least I could gauge what is the kind of money that is going to flow in from Temasek into the Indian companies?
So there is no internal target for any country. It's
but it would be a substantial growth from what you did last year.
So, well, it's already. Well, let me put it this way: we ended the year in a net cash position on our balance sheet. So we have cash available to invest. So if we find the right opportunities, we would want to invest.
What about exits? Many profitable exits we could be expecting from Temasek in this financial year in India?
I think we always look at exits in the context of valuations and the investment thesis. So again, it's there are no predetermined views in terms of exits we need to do. As I said, if we are looking to exit, we'll have to look at the valuation, and we'll have to look at the company and where are we going to deploy that money, whether in India or globally. And are there better opportunities for us to deploy that money elsewhere?
So finally, one word on how Greece, China and the various other global markets, the way things are developing there, how much is Indian market really exposed to those and would be impacted?
Clearly, if there are any of these risks around the world which become a global issue and lead to a global risk-off environment, that will impact all economies, all markets, including India, because all emerging markets particularly get impacted by that. But base case right now, I don't see either Greece or China having any material impact on what happens here in the Indian market.
All right. Thank you so much for spending so much time with us with your insights. Thank you so much.
Okay, thanks.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.